why the market always goes against you. Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+ Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello everyone, good evening everyone. And today is another series of our corporate briefing collaboration between this M+ Online, and also we are featuring UEM Edgenta. So tonight we will be having this UEM Edgenta, and UEM Edgenta, I think everyone would know them, quite promising counter. Over the past few years, I think a lot of people has been talking about them on their dividends. But right now, maybe we can have some good highlights, being highlighted by our the management tonight, and just a brief introduction on the UEM Edgenta. UEM Edgenta is the region's leading asset management and infrastructure solutions company, which has been listed on Bursa Malaysia since 1964. So their expertise covers from healthcare division to infrastructure to facilities management, and also the asset management segment as well. And recently, they have gone into some high-tech technology stuff. So I'm pretty sure a lot of people would be excited to know more about them. So before we go into this corporate presentation, let me introduce you to our speaker tonight, which is Mr. Rais Imran, the Chief Strategy Officer for UEM Edgenta. Hi, Mr. Rais. Mr. Rais, you are muted. Yeah.
Apologies for that. Hi, good evening, Louis. Thanks for having us today.
Yeah, good. So how are you today?
I'm good. Thank you so much. Well, it's a good Wednesday evening, and I hope everyone who's tuned us today have had their dinner, and hopefully I make this session as enjoyable and as insightful as much as possible.
Sure. And I also noticed that the share price of UEM Edgenta has been, has been shooting up over the past 2 days. I'm not too sure whether you can share. Maybe later on there is some, goodies that you want to share for our webinar viewers later on. So before we go into the corporate presentation, I would like to ask also, these viewers out there, if you like this video, please click the like button. Please click the share button as well to let more people to know more about UEM Edgenta. And right now, let's move on to the next agenda, which is we'll go through we'll watch this video together, the corporate presentation of UEM Edgenta. Okay. The corporate presentation, yeah.
It's a healthcare facility. We are UEM Edgenta, an asset management and infrastructure solutions company, providing consultancy and services to various industries across the region. Our asset management segment is a leading services and solutions provider to healthcare facilities and property owners across the region, while we also own decades worth of experience in infrastructure services and asset consultancy through our infrastructure solutions segment. As the leading healthcare support services provider in Malaysia, Singapore, Taiwan, and India, we offer clients corrective maintenance as well as critical services, from terminal cleaning to portering, integrated facility management and maintenance, to ensure hospitals and medical centers under our care run smoothly and function optimally. We manage and care for properties and facilities using smart asset management systems and services, offering clients cutting-edge solutions for a more sustainable built environment, delivering high-performance green buildings. In our infrastructure services business, we have modernized our maintenance operations on expressways, roads, and rail, introducing innovative digital and mechanized solutions built on more than 3 decades of experience to link communities and induce trade with safety and convenience of the people in mind. We are also proud of our experience in shaping landscapes by developing infrastructure to empower nations, to project management and engineering design capabilities via Opus Consultants, our asset consultancy arm. We have revolutionized our service offerings by adopting the Internet of Things, the use of sensors, automation, and mechanization to drive sustainable value for our clients. Our digitally enabled workforce embraces technology through the use of proprietary systems, softwares, and digital devices to deliver our services. Our technology-enabled solutions utilizes cloud computing to offer our clients machine learning and anomaly detection capabilities, which drive predictive analytics, thereby optimizing our maintenance approach across the entire life cycle of the asset. We automate and mechanize to optimize the asset experience, driving sustainable value for our clients and perfecting our roles of taking care of the caretakers. Our people across the region are our strength. To sustainably power our endurance, collectively we subscribe to a united vision of optimizing assets to improve lives. This is the Edgenta way, a way that has made us the trusted asset management and infrastructure solutions company. We create value and opportunities. This is UEM Edgenta.
You have a very wonderful presentation, corporate presentation video. So, Mr. Rais, so I guess I'll pass the floor to you to talk about the corporate presentation and also talk about the directions of UEM Edgenta. Yeah, over to you.
Thank you very much, Louis. Assalamu alaikum to my Muslim friends, and a very good evening to fellow friends and also investors that have tuned in for M Plus Online retail engagement session this afternoon. I myself am very thankful for being here today, and also I'm very pleased to be allowed to speak on behalf of UEM Edgenta, but also thank you so much to M Plus Online for organizing this session today. So as I mentioned earlier, I hope this session could be as insightful as much as possible. I will try and keep my brief very, very short and direct to the point. Would probably love to get into more sort of Q&A that we can do a little bit towards the latter part of the session. So without further ado, let me kickstart. I'll run through a couple of key imperatives that I want to sort of leave behind, so that you would understand UEM Edgenta a little bit better coming out of the session today, and what we do in terms of how we do our work and where we're shifting our focus as we look at the market going forward. Maybe a quick introduction in terms of the key management team in Edgenta. Edgenta today is led by Mr. Shahrul Nizam Shamsuddin. He's our Managing Director and Chief Executive Officer. Shahrul Nizam has held over 24 years of experience in corporate sector. He's helmed a number of leading institutions in Malaysia, including more recently the Chief Executive Officer of Touch 'n Go. He was also the founder and COO of Petronas' first IT outsourcing company, which was iParentis. And prior to that, he was also president of SCOMI Engineering Berhad, and have got many ventures as well as technology ventures in it, under his belt. With the executive management team, we also have Ms. Hilary, who's our Chief Financial Officer, myself, Chief Strategy Officer, as well as our also one of the addition in terms of how we look at Edgenta going forward as a key transformation digital business, which is Mr. Chua Yong Hao. Mr. Chua in particular has got over 20 years experience in working in a variety of technologies, working in a variety of industries, particularly in technology startups, consultancy, as well as telecommunications and the energy industry. And more recently, he joined us from being, prior to this, the country managing director of Eureka AI, which drives basically artificial intelligence solutions in various different sectors, including telecommunication and energy. So we're proud of this team. We continue to help drive the overall ambit as part and parcel of Edgenta going forward. Maybe a quick snapshot of Edgenta today. We're a homegrown company. We're based in Malaysia. We are a leading asset management and infrastructure solutions. We've got presence in over 6 core markets. Esther or anyone who's controlling the slide, perhaps we can move. Yep, thank you so much. We've got presence in 6 markets, namely Malaysia, Singapore, Taiwan, as well as India, the UAE, and as well as Indonesia. And we're looking at growing our presence in the Middle East, and we're focusing on opening up our 7th core market, which is the Kingdom of Saudi Arabia. We've got a diversified portfolio base, which is a very interesting value proposition that we bring to our clients, but also that we bring to our investors, where we've got exposures to different industry verticals. In particular, we are exposed to the healthcare space, which is a very uniquely an ever-changing space driven by the COVID pandemic, and where we have spent a lot of time in supporting a lot of our clients, be it on the public or the private side, to be able to help transform and shape the entire industry moving forward. We are exposed into the I would say the properties segment, which is typically the commercial real estate segment, in a way where we manage facilities and portfolio that comprises of residential assets, commercial properties and buildings, hospitality assets, golf courses, villas, as well as we are now pivoting into the industrial sector, where we can provide a life cycle view in terms of maintaining an asset over a long duration time. The third industry verticals where we have been very, very much developed is in the infrastructure, as well as in the road that consists of road and rail, where we've got a long history of track record driving consultancy, construction, as well as maintenance in a number of large infrastructure in assets in Malaysia as well as in Indonesia. We've got a long-term order book of about 11.6 billion, which drives basically long-term visibility in terms of our earnings. We're more driven today as part and parcel of a company that is trying to shape the asset management industry to technology solutions. So you will see later that I'll talk a little bit about our new venture in Edgenta Next that will help to drive the medium to long-term nature of the industry going forward. Net asset per share at 183. And more recently, I think thanks to a lot more interest in the stock, we've seen Edgenta coming back to becoming a core constituent of the FTSE Bursa Emas Index effective June 2021. And we look forward to be able to be included as well as part and parcel of our sustainability journey into the FTSE for Good, hopefully sometime next year. Now, I explained a little bit about the business earlier. UEM Edgenta is part and parcel of UEM Group, and our major shareholder is Khazanah, so we're a government-linked company, and we have 4 industry verticals of 4 business segments, and we are organized around 2 sort of broad set of capabilities. One is the asset management capability, where we involve ourselves in healthcare support, industry vertical, as well as the properties and facility solutions industry vertical. Just very, very briefly, and you would be able to appreciate this a lot more. In the healthcare space, we support over 300 hospitals across Malaysia, Singapore, Taiwan, as well as India. In Malaysia, we basically support both public as well as private hospitals in relation to providing soft as well as hard services. So this is anywhere from cleaning, cleansing, portering, all the way up to facilities engineering, where we take care of anywhere from their hard assets, namely your HVAC, your chillers, your compressors, your pumps, your lightings, and including biomedical engineering, where we provide support in relation to be able to help take care of large medical facilities, such as your X-ray machines, your CT scans, your scopes, and other devices that the clinical practitioners use to ensure that they have continuity of services. We do this in Malaysia, as I mentioned earlier, for the public hospitals, where we manage as part of a 10-year concession for the MOH hospitals in the northern region. We manage over 30 hospitals in the northern region, from Perlis to Penang to Kedah, and as well as Perak. We do the same for all the hospitals in Sabah and Sarawak, as well as part and parcel of our joint venture with local companies in Sabah and Sarawak managing those hospitals. In Singapore, we manage over 90% of the government hospitals in Singapore. This is driven to our own 100% subsidiary UEMS, which has been operating in Singapore for the last 10 years. We're the #1 service provider to MOH hospitals in Singapore, where we provide soft services, mainly cleaning, cleansing, as well as portering. And we are diversifying our business in Singapore to look at other industry verticals as well. Similarly, in Taiwan, we are probably catering to about 50 to 60% of the hospital beds in terms of providing non-clinical support services to key hospitals, key public hospitals in Singapore, in Taiwan. And further to that, we have more recently expanded our capabilities into the industrial segments. So if you recall, one of the largest industry that is driving Taiwan, for example, is the semiconductor industry. And we are now providing facilities management for manufacturing facilities in Taiwan in relation to the semiconductor industry as well. So these are some of our examples of our healthcare solution. In terms of properties and facilities, we manage over 300 buildings under our care, comprising of commercial properties, commercial buildings, residential properties, as well as hospitality assets. And this is through our presence in Malaysia as well as in the UAE, particularly in Dubai. Just to give you a flavor, some of the marquee assets we manage in Malaysia, we manage the Prime Minister's office. We also help manage the Proton facilities, as well as we work with KLCC properties, where we help deploy technology solutions, and we co-manage their facilities together with KLCC Urus Harta for the Tower 1, Tower 2, as well as Tower 3 of Petronas. For CIMB, for example, we manage the entire network of CIMB bank branches from north to south of Malaysia, and we have a large network of services. Now, what's interesting as well, in addition to that, we manage a significant amount of facilities in Dubai. So if you go to Dubai today, we manage under the Al Wasl Group, which is the government-linked company that is linked to the ruler of Dubai, Prince Mohammed Al Maktoum. where we manage over 150 facilities for Al Wasl Group that is within the Dira District 1 and Dira District 2, which is the core districts at the heart of Dubai for the Al Wasl Group. In addition to that, we also manage key marquee hospitality assets in Dubai, including the Emirates Golf Club in Dubai, as well as the Jumeirah Golf Club in Dubai. So that's our capability in the asset management space. In the infrastructure solution space, it's a predominantly Malaysian business. We have got a little bit of a venture with Astra in relation to be advising and providing consultancy support in relation to managing toll road in Indonesia. But like I mentioned, predominantly a Malaysian business. We have got two segments. The first is basically infrastructure solution, where we help manage and maintain key road infrastructures. That includes the entire north to south plus highway. And in addition to that, we manage state roads as well for the Selangor State Government as well as the Sarawak State Government through our work with JKR. Opus Consultants are the engineers that are backing the solutions that we drive in terms of the long-term life cycle asset management strategy. It has over 100 billion worth of project track record under its belt. It had executed projects from either road or rail infrastructures, either as an engineering consultancy firm or a project management consultancy firm, and to a certain extent, at times, we are asked to represent our client as an independent engineering company from a review standpoint. So those are the business segments that we have. Maybe very, very quickly in terms of the snapshot of UEM Edgenta today. So where we are today is our business continues to remain adaptable and resilient despite the challenges. We've seen the business, as many other businesses out there, being impacted, driven by the COVID pandemic, which has impacted a lot of the work that we needed to execute as a result of the movement control order or the restriction in terms of being able to deploy our people to execute planned works. Now, as the market improves, as the situation with COVID improves, we've seen a lot of those restrictions being lifted, and we are able to resume a lot of the work that we've had put on hold in the past. Our core fundamentals remain intact. We still expect some short-term challenges as the market and the economy recovers. Everyone would assume that it will be a V-shaped recovery. However, in many instances that you would find, the recovery of the economy as well as the markets, and more importantly, our clients who have been significantly impacted as a result of the COVID pandemic, which had a significant impact in terms of their cash flows, doesn't mean necessarily that we will be looking at sort of a V-shaped type of recovery, and so therefore we remain cautious. However, I think we are confident that our core fundamentals remain intact. Now, what's more important is that we are market ready to cater to the shift in terms of the industry demands. We have a very strong technology proposition. We're focusing on more value-added services through anchoring on sustainability as part and parcel of a differentiator in terms of the market. And we are able to drive an integrated service offering that combines soft services, hard services, as well as value-added work that we do to our clients. Our business fundamentals are strong, I would say. We've got a diversified revenue base. I'll talk a little bit about that later. Our balance sheet is very, very healthy. Our gross gearing is at about 0.32 times, and we've got a long-term order book that goes up to 2038 as part and parcel of managing concession contracts with Plus. Now, we've got a strategy in terms of how we see the world is moving, and the world continues to be dynamic, especially in the industry where we manage. Asset management, being one of the industry, is not being spared as a result of the transformation that we've seen in terms of digital and digitalization. So as we embark on a journey of defining what the future of Edgenta would look like, it will be anchored on what I call transforming Edgenta into a digitally enabled company that is able to pivot onto services or capabilities that are anchored on healthcare. So digitalization of our businesses is a core anchor. I'll talk a little bit about it later. Focusing a lot more on solutions that we can drive in QuickMed, which is our healthcare platform. We're looking at making our business a lot more optimized and driving I would say leaner and cost savings from the organization, and at the same time we're looking at expanding our business regionally. Just a key snapshot as well in terms of the financial highlight for the quarter in review. We've announced our first half 2021 results early this year, sometime in August. I think the key themes here is, again, we're adaptable and resilient despite the short-term challenges. We've seen a 14% increase in first half year-on-year revenue that is driven predominantly by healthcare support services. The group revenue had improved quarter-on-quarter 11%, and an improvement of 6% in terms of normalized earnings. Similar trends have been seen on the first half year-on-year results. We've seen earnings lower than last year, but remember, last year we had one full quarter last year without the COVID pandemic. This year we have 2 full quarters that we have been impacted as a result of the COVID pandemic. Having said that, we continue to see a little bit more short-term challenges as the market improves and recovers, and remain cautious on this. But our fundamentals remain intact and we are positive on the future. Over the year, we've secured about 700 million worth of contracts. And again, to kind of highlight some of the credentials we have, where 70% of these contracts are secured in the healthcare market, and about 50 to 60% of this is driven by international space, particularly in Singapore and Taiwan, where we have got a large commercial offerings and exposure to the healthcare market in Singapore and Taiwan. Similarly, we have 76% of our new contracts in the commercial space as part and parcel of diversifying our order book, particularly looking at commercial contracts. We mentioned again, we have got a healthy order book. But more importantly, the pivots and the shifts that we're looking as part and parcel of Agenda of the Future 2025, looking at integrated sustainable healthcare business, as well as launching our digital ecosystem later this year, and regional expansion as a core strategy. Our balance sheet remains healthy. We've got a total asset of 2.8 billion ringgit at a gross gearing of 0.3 times. Our net asset per share is 183, and our net cash is about 120 million, with a cash bank and bank balances of about 540 million. Moving on, we've got a robust order book providing long-term earnings visibility. I think the slides are not moving, but perhaps we can move on to the 2 slides after that. Next slide, please. Yep. We've got a robust order book, like I mentioned, 11.6 billion, and you can see the composition of our order book, where about 7.3 billion is in relation to the long-term contracts that we have with our core client in the infra business, which is Plus. The remaining 3.4 billion order book is in healthcare, and the balance, about 900 to 1 billion worth of work in properties and facility solutions, as well as asset consultancy. On the right-hand side, you can see that a large extent of our new contracts, or about 70%, are driven by the healthcare space, and I'll talk a little bit about that later. And 50% of that comes from the international markets. Some of the contract wins on the next page that you would see are key highlights. So, for example, in Singapore, where we've been able to expand our services to include the Tan Tock Seng Hospital. This is a more recent addition to us, but we continue to be able to pivot into new areas of services beyond the typical cleansing. So we're providing kitchen stewarding, housekeeping, as well as health attendance services for some of the hospitals in Singapore. Similarly, in Taiwan, we're managing the Taitung Christian Hospital. These are a new addition to us, the Weigong Hospital, NTUH East Campus, as well as the Chenching Beng Tan in Taiwan facility. Now, very interestingly, in terms of our move towards integrated sustainable healthcare business, we've deployed a number of services for our government here in Malaysia, as well as the private hospitals. We have been very successful in supporting the COVID pandemic. We've built over 8 field hybrid ICUs to support MOH in relation to catering to the high number of ICU patients as a result of COVID. This is a mobile hybrid ICU unit that is built within a 28-day period that caters to high infrastructure requirements for both concentrated oxygen, for example, at the same time, critical units to cater to high critical care for patients that are going through stage 4 and stage 5 of the COVID. We've also launched our own private COVID assessment center that later got pivoted into a vaccination center that we are working closely with MOH, where we're deploying vaccines for mainly today for, I would say, teenagers below the age of 18 years old, which is a new program that is being launched by MOH. We do quite a bit in terms of biomedical engineering and maintenance services, so that's BEMS, where this year alone we have helped replace a number of equipments in hospitals, including X-ray machines, CT scans, CAT scans, as well as scopes. This has accumulated to about 60 million in terms of contract wins this year and helping hospitals to have new facilities. We've also deployed a new service in relation to providing a more effective home quarantine solution using technology, where we're able to track and monitor patients by not necessarily having to go at quarantine facility, but by just remaining at home, and at the same time giving the safety and comfort level to patients by being able to monitor pulse, their SpO2 levels, and their health condition level, integrated with our QuickMed application, which we've launched earlier this year, that allows patients to integrate and speak to medical care practitioners in a very seamless manner. Some of the key highlights that we do in the properties and facilities business, KLCC is one particular where we help manage facility Tower 1, Tower 2, and Tower 3 of Petronas. We recently built an integrated building command and contact center. So this is where we deploy our technology capabilities in asset management for Petronas. And more importantly, what we're doing right now is with the data and technology that we are harnessing from a command center by sensorizing the entire 3 towers of Petronas, we're now driving analytics and predictive maintenance and moving it into an artificial intelligence algorithm integrated with Internet of Things to drive what we call hyper-aware buildings. So this is very similar to what you would see the future of cars, where cars will be fully autonomous. So this is what we are trying to drive from a building perspective, where building will be fully autonomous, and we call it hyper-aware or smart building, in a way where buildings get to sensorize and feel their own demands and being able to translate to those demands by providing its own services and solutions autonomously. Moving on, if we talk about the contract wins in infrastructure, just some key highlights. We continue to expand our services in Pan Borneo. So if you recall, a lot of the growth in infrastructure in Malaysia is actually happening in Sabah and Sarawak. Pan Borneo is one of the key marquee assets that we have been involved, both in the engineering as well as the construction space. We continue to look at opportunities to expand our capabilities beyond Pan Borneo by working with state governments as well as state roads. There's a key highlight in terms of our international portfolio. Reminded earlier that we've secured over 50% of new revenue stream coming from the international business. We continue to diversify our international revenues. Just a year ago, we were about 40%. Up to first half this year, our revenue is about 43% contributed from international markets. And this constitutes Taiwan, which is our largest international market, followed by Singapore, 18%, and then we have the UAE as well as Indonesia. Moving on, sustainability is an anchor towards the business. So whilst we help our clients to make sure that they have the best facility in terms of from an occupational standpoint, from a cleaning standpoint, from a facilities engineering standpoint, as well as from a safety standpoint, we continue to drive value-added services to our clients by differentiating our service offerings, particularly in the areas of sustainability. One of the things that we do, for example, is we drive energy efficiency through energy performance contracting, as well as solutions where we undertake CapEx investments to bring down energy consumptions in a particular property or hospital or particular infrastructure. And we amortize those investments over a 5 to 7 year period where we get to provide a return, an asset return strategy through maintaining the facility, that allows us to deploy our services in the same time. Some of the key achievements here can be seen on the slide, but one that we are very, very proud of is, the achievement of a platinum status at the Prime Minister's Audit Office as far as Green Building Index is concerned. And we have maintained that over the last 10 years, and we continue to see that as a marquee asset for us. But also, very interestingly, early this year, we were able to achieve the LEED Gold rating status for Hospital Sultanah Maliha in Langkawi. And this is a key note for us, is because it is the first hospital in the world to be accorded the gold rating status. So this is a very significant, tremendous effort that the team has put in place. It is a hospital that is about 40 years old, and it's not easy to be able to convert it to one of the state-of-the-art in terms of energy efficiency. We do a lot of waste management work as well, and as well as recycling. In Malaysia, for example, healthcare waste management, we do that in particular for the assets that we manage or the hospitals that we manage. We've got our own incinerator plants, and we manage over 800 medical facilities in terms of clinical waste in Malaysia. We do quite a bit of recycled pavement work. So where we have to manage pavements in infrastructure solutions, we tend to recycle those pavements when we repave them by using recycled asphalt or reclaimed asphalt. That would allow us to be able to help our clients reduce their costs, but at the same time make it a more friendlier and safer environment by virtue of helping reduce the consumption of asphalt, which, as you know, comes from bitumen and is a derivative of petroleum and oil and gas products, which are prone to CO2 emissions. So this is what we do in collaboration with Petronas Research, with the Taiping Municipal Council, as well as JKR Sarawak, in terms of deploying pavement or recycled pavement materials. Consultancy services, we do quite a bit of energy audit and GBI consultancy, and this is part and parcel of us driving energy efficient solution. Just very, very quickly, in terms of agenda of the future, I'm reminded I have 5 minutes before I pass on for the Q&A session. So I want to be able to make sure this is as interactive and insightful as possible. Agenda of the Future 2025 is our vision to drive the company towards the technology-enabled solutions with a focus on healthcare. We're looking at expanding and deepen our horizon as part and parcel of our footprint as well as our solution base. We're looking at extracting more value from our core business by achieving optimum position in terms of efficiencies through mechanization, automation, as well as optimizing our procurement and streamlining our business structure. We're also looking at enhancing our technology and product proposition, and I'll talk a little bit about our new digital arm, which we just launched early this year. Some of the key highlights of what we've achieved over the last 6 months. We've broke ground in terms of our expansionary strategy in Saudi. We're looking at integrating and consolidating our Singapore business by making it a lot more larger than what it is today. We're looking at expanding into an integrated facilities management. If I can ask to move to the next slide. We are looking at an ME15 acquisition strategy in order for us to be able to drive an integrated facilities management solutions business in Singapore. What does that mean is today in Singapore, we're very much focused on healthcare. I want to be able to provide integrated facilities by looking at smart FM technology, by looking at hard FM, which is mechanical and engineering, the M&E space. And I want to be able to be doing that beyond healthcare. So for data centers, for industrial facilities, for properties and residential assets. So that's the sort of the Singapore canvas, if you ask me. We're looking at driving more integrated, sustainable healthcare solutions. I've mentioned some of it already. And then in terms of optimization, we've achieved about 9 million savings through the year, and we continue to drive efficiency in terms of how we contract with our clients through a performance-based contract, where we are not stipulated from a BOQ or bill of quantity standpoint, where we are stipulated in terms of outcome and KPI delivery-based mechanism, where it allows us to be a lot more fungible in terms of our cost structure in deploying our solutions, and at the same time allow us to employ mechanization and technology a lot more in driving efficiencies in terms of how we manage assets. Agenta Next, which is launched on the 28th of July in 2021, is our new business pillar that we're looking at both driving efficiency in terms of how we manage our own assets for our clients, but also to disrupt the industry by providing new types of services through software as a service as a platform. We're looking at productizing some of the solutions that we have already created. That includes RAMS. So RAMS is an infrastructure technology solutions that we have. It's called the Road Asset Management System. We're launching that together with JKR and Plus this year. And we've launched our new product in the market, which is called QuickMat. And QuickMat is basically a system, a clinic management system that we hope to deploy for clinics in Malaysia by helping them move from a traditional brick and mortar clinic to a clinic on a cloud. And what do we mean by clinic on a cloud is where clinics, and I'm talking about sort of the very traditional clinics, allow them to operate more agile by having a software solution that can manage all their back-end system, from patient data to inventories to medical and drug records to patient care records, and in terms of how they provide the care to the patient through an online platform, telemedicine being one, but also the delivery of drugs and medications through a very, I would say, digital window. Just moving on, I'll just give you a little bit of a flavor in terms of some of our added advantage. We manage our assets that comprises of hospitals, properties, vehicles, highways, laundries, and devices, through a very unique way of an integrated command and contact center approach, where a lot of these data points are sensorized, fed through our command and contact center, as you can see in the photo, where we have not only help desk, but we have data analytics or data analysts to be able to drive basically predictive and preventative maintenance. With Edgenta Next, we are taking this solution and driving basically what we call a software as a service solution by allowing clients to be able to use this service without, or being able to use the softwares without Edgenta necessarily needing to provide our own manpower from a service standpoint. So if I can just make it as simple as possible for you to understand, if I take the FM market, traditionally in most FM market, we see 50% of the work are being insourced and 50% of it are being outsourced, which means for traditional companies like Edgenta, the important revenue stream of the market is the portion that is being outsourced, where I would typically deploy services that are either manpower or facilities engineering or biomedical engineering or M&E in order to help manage clients' assets. Now, the other 50% of the market are typically in-source. And when I say in-source, it's basically self-managed by the client. Now, a lot of the times when we find clients self-managing their assets, it is in a very traditional approach without the use of technology and without the use of mechanization that helps them drive a more optimum structure. So what we're creating right now is in a solutions that we have deployed in the assets that we manage, by making those solutions available to those companies that manage assets themselves, but by cross-selling our technology solutions without necessarily providing the services. So how we're doing that? We're doing that through a cloud service offering, where all our solutions are being hosted on the cloud, and we are going to the market by telling our clients to be able to use this as a solution without necessarily providing services if they're insourcing this. We're also creating a marketplace where we collaborate with partners to be able to drive a more holistic solution in terms of asset management and property management. And we like to also explore another area where we can drive a more effective procurement through digital and technology. Just a few more slides before I end. I promise you I'll end in 2 minutes. Technology and mechanization is a key competitive edge for us. We drive a lot of robotic solution and mechanized solutions in every deployment, be it hospitals or highways. On the next page, you will see that as far as our healthcare business today, we are extending it beyond our traditional non-clinical support services. So we've grown our services, not just looking at non-clinical, we're now looking at providing replacement through maintenance, disinfection services, private COVID monitoring, as well as vaccination, screening services. In terms of infrastructure, we've deployed unique infrastructure, including the hybrid ICUs, MOSFAC, which is a mobile lab that we are launching as part and parcel of our services in key infrastructures, as well as the e-bracelet or home quarantine solution infrastructure that we are working together with MOH on. And last but not least, deploying that together with technology, where it helps transform the future of healthcare. And so digital healthcare using QuickMed is our key anchor pillar, where we're helping drive cloud-based solution EMR, sync with MOH, with dashboard and analytics, as well as through monitoring of our command and contact center. These new services over the last 9 months have contributed up to about 170 million worth of new contracts that we have been able to garner, and we hope this business will continue to drive the growth journey for Edgenta. On the next slide, some of the photos of some of the services that we've deployed. I will probably not go into the detail. And just moving on, we talk about home quarantine solution. Further to that, next slide, you can see our hybrid ICU solution that we've deployed now to over 12 different hospitals in Malaysia. And last but not least, a slide that depicts our capabilities in terms of maintaining as well as replacing key infrastructure assets in hospitals. So these are examples of large infrastructure assets that we manage, we maintain, and at times we have our own program called Replacement Through Maintenance, where we invest in this equipment. We provide the hospital provider the best in-class equipment, and we are able to convert the capital investment that hospitals traditionally find difficult to invest in into an amortized OPEX model, where we help maintain and they pay us an annual fee for being able to replace those equipments and manage those equipments for them. So the last slide I'll leave the day off with the key investment highlights. So again, I would kind of just remind ourselves a little bit. We're a regional leader in terms of asset management, got a diversified revenue base, as I mentioned, about 40% driven from our international markets and exposed over 6 countries. Our fundamentals remain intact, driven by a robust order book and a healthy balance sheet. Outlook, we look at, we remain cautious in terms of the recovery in the market, but we're positive in terms of the prospects going forward, especially driven by the fact that we are market ready through our technology proposition, our sustainability proposition, and our ability to drive integrated service offerings. Last but not least, I know Louis mentioned a little bit about our dividend. We continue to be committed to our dividend policy of about 50 to 80% of Patanchi. And historically, we've been doing about 70% of our dividend that we do on an annual basis. Over the last year, we've been prudent and we've been conserving our cash flows in relation to the fluctuations and also the challenging environment, but we expect to resume such practices in the near term. So with that, I'll end my presentation. Again, sorry for taking a little bit more time. I hope I have provided some of the key insights for you to consider, and would love to take questions from the floor. Back to you, Louis.
A lot of people has been hooked by your presentation, and until now, this is the first time that I didn't see any questions from the floor. It is very, very comprehensive and very informative. Yep. So I think maybe I will just ask a few questions from my side. I think it's very interesting that this your healthcare division and also it is supporting the group for the time being. Around 60%, if I'm not mistaken, around 50 to 60% for now. Then moving forward, what can we expect, from the recovery tone in terms of the economic activities, reopening of the, after following this vaccination drive? What can we expect in terms of this UEM Edgenta, in terms of the other side of the business? Yeah, the infra side. Yeah.
Yeah. Okay. So what we've got to start recognizing is markets, right? And markets are driving the recovery in the economies. And I mean, unlike the asset management side, where we are exposed across 5-6 different markets, where we see the ability to drive different growth horizon across different markets. I mean, Singapore has got a different growth trajectory, Taiwan has got a different growth trajectory, and we are able to capitalize on that. On the infrastructure side, it will be predominantly driven by Malaysia. Okay, so if you look at the Malaysian market in terms of infrastructure today, what we're looking at is basically a market that has been very predominantly I would say, a slightly muted infrastructure scene over the last 2 years. This is a fact, and it's driven by a lot of things. And I think we all know what has been some of the factors that has caused this. And exacerbated further by the stretch in the budget as part of the government in terms of launching what would we know traditionally as PPP or PFI type of model. Now, what we've been able to capitalize on as Edgenta is by looking at where the growth is coming from. If you look at Malaysia, a large part of the infrastructure growth is in the Borneo part of the region. So Sabah as well as Sarawak is our key play. So in fact, this year we've been very, very busy in terms of supporting some of the work resumption as a result of the COVID pandemic, where we weren't able to deploy our resources earlier, but now we've been able to deploy our resources. And so work are expected to resume very, very quickly, particularly for Ban Borneo. But also one of the interesting projects that we're doing is KUTS, which is the Kuching Urban Transport System. So we hope this work to resume very, very quickly, which will help drive a marked shift in terms of how we look at our work, particularly in the Borneo side. Now, maybe just kind of moving along a little bit into what's there for us going forward. And I will touch a little bit about the RMK12 that was launched, I would say, by our Prime Minister, by our Honorable Prime Minister, just a few weeks ago. What is interesting about the RMK12 story is the narrative around how government has committed over 400 billion worth of work for key infrastructure project, and also the special facilitation fund that is supporting the needs for infrastructure project through a private-public partnership 3.0 model. I think they mentioned a little bit about undertaken via an RFP, and we will probably hear a lot more of this in 2022. So, I think we would expect a lot more excitement in this space in particular going forward. I think we are here to also stay and listen out a little bit more in terms of what this is going to look like. I think it will have a lot more private sector investment involvement through a more robust PPP infrastructure, but will allow concessionaires to be a lot more effective in delivering this model. Now, there's also a sectoral shift to this, right? I mean, if you look at the large part of the investment, obviously will be in typical infrastructure, which is road and rails, transport infrastructure. But there's also a sectoral shift that I think will be interesting to look at. One is a sectoral shift towards more friendlier energy resources. So there will be a lot more infrastructure to be looked on driving renewable energy landscape. Now, Edgenta, we're not there yet. I mean, we're not providing services in terms of building, solar farms and whatnot. But we have been able to support our asset owners, for example, in the Prime Minister's office, where we invested in helping as part and parcel of the Green Building Index, where we've built basically a small-scale solar facility next to the Prime Minister's complex that makes it a completely green energy building, right? So we've done that. But if this is the trajectory of growth in relation to sustainability, and energy as well as water becomes very, very key to long-term infrastructure, it would not discount the fact that these are some of the sectors that we may look at from a perspective of providing engineering capabilities, as well as maybe providing maintenance capabilities as well.
Yeah, good to hear that. Talking about this, just now you mentioned about Pan Borneo Highway, right? So right now, what is the stage that you're in, and is there future concessions that you are able to get, and what sort of order book that you are expecting in that region? Because you said Pan Borneo is a big chunk of it, right? Yeah.
Yeah. So just to be clear, what we do in Edgenta, we don't own the concessions for the highways or for the roads itself. We work with clients who do that, right? The services that we provide is one, we're right now hired as an independent checking engineer to an engineering firm as well as a construction firm to provide advice to our clients. Two, we provide basically construction services by deploying some of our capabilities, particularly for pavements in relation to helping them construct the toll road. So that's the involvement that we have as part and parcel of UEM Edgenta today.
Okay. So normally, what kind of tender book do you have each year, and normally what are the order book that you are able to get per annum?
Interesting question. Thank you so much. If you look at our tender book, I guess the tender book is one of I wouldn't say there is a flat view in terms of tender book, because a lot of the work that we do are rolling basis, because we manage a facility over 5 years. Typically, when it comes to renewal, either we have a first right to renew, or ultimately it goes into a bidding process, right? So as and when this bid comes out, we participate. But I don't think we kind of look at it from a tender book perspective necessarily. We look at it more from what's the addressable market in a particular year, and different markets have got different addressable market. But on the order book side, if you look at our order book, 11.6 billion, what we are targeting in terms of new contract wins, as much as possible, we would be able to, for example, last year, we've recorded a new contract win of 1.4 billion. That's on the back of basically part and parcel of clients wanting to renew key marquee assets or renew or extend key marquee assets. A lot of them is driven by Singapore and Taiwan, but also Malaysia, not to mention. And this year we've got about 700 million on the back as well. I think we will be able to stretch a little bit more to about 1 billion and a little bit more than 1 billion mark for the remainder of the year. So we remain hopeful. Now, in the long run, and a lot of the impact that we've seen this year is as a result of the COVID pandemic as well. So there was a lot of deferment in terms of tendering exercise, and there was also a lot of shrinking in client budgets. And as a result of it, a lot of the services were scaled down to a certain extent. I would say if we kind of expect things to improve a little bit more to normalcy, again, I personally believe normalcy is not going to be there. There is this new normal, and this new normal is not the same normal, right? There will be a lot more tightness in budget. There will be a lot more expectation in terms of margins to be pruner, I would say. There will be a lot more expectations from our client for us to be a lot more agile through a performance-based, where we can deploy resources based on demand. There will be a lot more expectation in terms of deployment of automation, robotics, and technology to reduce costs further. And there will be a lot more expectation to drive analytics and predictive. Now, if you take all this into concern, I think we're heading towards probably a long-term perspective where order books are going to be important to the extent of us driving concession business. But for the private business, it's going to be about what solutions and what products are you going to drive to the market. Is it your integrated healthcare solution? Is it your sustainability solution? Is it your technology solution that you're driving to the market? So when we speak to our private clients, yes, we would like to win those large contracts, multi-years and whatnot, but our clients, trust me, are asking us today, what is unique about you that differentiates yourself from just being able to clean my facility, right? So yes, integrated is probably the way to go, and this is how we can differentiate ourselves going forward.
I guess I very agree on what you have mentioned about the sustainability and also the technology use, and that is why the Edgenta Next has been born. Is that the thinking behind it?
That's definitely one of the thinking, but I can tell you the large thinking is around the thesis on how this industry will be disrupted.
Okay.
Right? There will be, like I mentioned, the autonomous vehicle. You will have autonomous buildings going forward.
Correct.
Right? And so that has got a different implication in terms of how you manage your assets. I can give you an example. In KLCC, we are helping Petronas today drive what we call a hyper-aware building. A hyper-aware building that integrates data, drives analytics, that connects to an AI algorithm, that drives IoT solutions with devices. One of them, I mean, no jokes aside, there is a huge conference out there on smart toilets, okay, where toilets are going to be fully autonomous in the future. No jokes aside, right? But I can tell you that's an example of a solution that we can drive in the market. But that's the 2025 view, 2030 view, right? But we've got to start today because this industry is poised and ready to be disrupted.
Yeah, I remember seeing some tweet out there to say that, these Elon Musk or the Tesla are able to order their parts when they're spoiled, right? So in this toilet solution, I guess when the toilet paper is out of, then they will order themselves. I guess that is the idea. That's the idea, right?
And you should be able to predict that before it run out, because otherwise then you're going to have a problem.
Yeah, that is where your AI and machine learning comes in.
Yeah.
Okay, so I think we'll settle for another few more questions before we end this session. Is that all right?
Yes, definitely.
Yeah, I am very interested in this, Saudi Arabia venture since April. So what sort of contribution can we expect, for FY22, because FY21 is already almost at the end, right? So what is there for us in FY22?
Well, to be honest, opening new market is not easy unless I buy something. Okay. So to be very honest and blunt, if I'm doing an acquisition strategy, then you can expect a contribution in 22. Our approach right now is it's a new market. We got to learn. We got to understand the peculiarities of the market, and we've got to be able to drive a unique brand value proposition in the market. You know why? The market is very immature in terms of asset management. A lot of the players in the market today in Saudi are manpower supply company. So you will talk to a facility management company. Hey, I need your service. The first question they ask is, how many people do you need? 500 people, 2,000 people, 3,000 people, because it's all about manpower, right? So it's very nascent. Contracting structure is very on an individual service base. So I want you to clean the floor. I want you to wash the toilet. I want you to be able to provide services for my aircons, right? Now I'm just dumbifying the conversation here, right? It's a lot more complex than that, but I'm just trying to reflect the nature of the industry, right? But when Edgenta goes into those kind of market, I ask myself, are those type of services do I want to provide? Do I really want to play the manpower game? I don't want, because you know why? I can collaborate with someone in the market who knows how to play that game way much better than me, right? The labor deployment model. So I don't want to play that game. But where we can differentiate ourselves is being able to take the knowledge and the pedigree of processes, of technology, of SOPs, of operating hospitals, of operating marquee assets in Singapore, in Dubai, in Malaysia, in Taiwan, and provide a consultancy to anchor clients in Saudi. And why this is important? I think if you just research Saudi 2030 vision, and you will understand how the market is shifting in a significant way. And I wish I had that slide, but it's okay, no issue. I think you will be able to find this very easily on the web, which talks a little bit about where Saudi is investing over $7 trillion in creating 7 new cities, and these cities are going to be defining the next vision of Saudi. Some of it is like the Neom city or the Red Sea development. A lot of this, I mean, I was just in Saudi in September for a month, and I'm just blown out of proportion when I look at people who are working in this development. I mean, a lot of them are expats. A lot of them are people from architects and development agencies from the US and London, and they're serious, and they are stealing away the limelight from Dubai because they see that Saudi should be the next destination of investments. So where Saudi is today, nascent. Where they're going to go in 2025, a completely different shift in terms of the market. So Edgenta, we're not there for 2022. We're there for 2025. And so let's differentiate ourselves by providing, by starting to help deploy knowledge consultancy-based type of work, to help clients like Ministry of Health in Saudi, in order to help the Public Investment Fund, which is the Khazanah equivalent in Saudi, in terms of how they can deploy an asset management strategy based on more effective lifecycle management approach. So we start small, we scale, we differentiate ourselves, and then in 2 to 3 years' time, we will probably have good revenue income stream coming in from a new country in Saudi. So that's an organic model. Now, I could flip, if I think it's interesting enough, into an inorganic model, but for now, the model is very much an organic base. So expect an 18 to 24 months of gestation period in a way.
Yep. So in that sense, what sort of capex are you putting in for this collaboration or this venture?
No capex. No capex. A lot of it, like I said, are IP and knowledge driven by SOPs, processes, technology. So it's a lot more deployment of people that we have on the ground in in Dubai, in Singapore, in Malaysia, that we are deploying in Saudi to be able to sell the knowledge and capabilities that we have from a consultancy standpoint, as well as, I guess, if there are capex that we expect, it would probably be in tandem of capex that a client that will need to invest in. For example, if I want to deploy Edgenta Next solution in Saudi, and the client will need to invest in a cloud stack environment, or will need to invest into an infrastructure to support an IT platform that allows them to drive effective asset management strategy, that would be the client's capex that will form part and parcel of my revenue and income stream. So I'm a service company. I don't need to invest in assets, capex per se, very minimal typically. But if I'm going to manage this, in 5-10 years time, if I want to manage a highway in Saudi, for example, yeah, of course, I need to buy trucks, I need to buy vehicles, but that's probably not our short-term game. That's more maybe our mid to long-term game.
Okay, so I just last two questions. One of it is on the recovery side in Malaysia. What sort of recovery have you been seeing in let's say the Plus Highway? What kind of what kind of expectation that we can look out for in the fourth quarter or even next year? Because right now it's already the recovery phase. Are you seeing the like you say, it's not going to be normalcy, but the new norm, is it comparable with 2019 figures?
Yeah. So I would shift our mindset to move away from a 2019 figures as far as a near-term immediate recovery is concerned. The new normal will be defined by the recovery of our clients' cash flow. Okay. All our clients, be it hospitals, be it asset owners like Plus, be it properties or facilities owners, have gone through 2 years of cash flow restriction, right? No cars on the road, so no income. Hospitals, an amazing significant amount of costs that has been padded on hospitals that has impacted their budget as well as cost to operate, and therefore their cash flows. Properties and facilities, in occupancies, people moving out of rentals, people no longer wanting to spend to maintain facilities on a normal basis because of low occupancy rate or 30 to 50% occupancy rate, for example, in the past 18 to 24 months, have significantly reshaped our clients' cash flows. Now, question I have for all of us to ponder: will our client cash flows recover in the next 6 to 12 months to 2019 normalcy, right? That recovery will drive the recovery of our business, right? Seeing cars on the road is great, right? That is the first sign of the recovery. That allows us to resume our work, right? Deployment of our people, executing of the work that previously were start, stop because of the travel restriction, and our clients now being able to see a little bit more longer term. So let's continue to run the program that we wanted to run before. But spending needs to improve, and for spending to improve, the recovery in companies, in cash flows of companies, needs to happen to drive spending in the market. And spending will then drive basically the recovery of service sectors like us. We don't own hotels where overnight you expect people to come back to vacation destination, right? But if we manage hotels, like for example, I manage hotels in Dubai, I would expect our clients who are hotel operators, their cash flows to improve overnight, because immediately they're getting a significant jump in income and revenue stream. So it will be client dependent. It depends on our clients. So in terms of the trajectory of the recovery of the market, the short-term benchmark will and cannot be 2019. It will be gradual. but we will need to rely a lot more in terms of how and understand a lot more in terms of how our clients' recoveries are going to look like, because that will dictate spending going forward.
Great answer. So I guess we have no questions from the viewers right now, and I have posed most of my questions right now. So is there any last conclusion that you want to mention about the UEM Edgenta, or maybe tell us some, give us some goodies, before we end this video?
Unfortunately, Louis, I would love to give you goodies, but I'm also restricted by virtue of MMLR, as you know.
Yes.
So I wouldn't do that. But the last thing I would probably leave behind for
Yes.
fellow investors on the call. Again, thank you very much for being with us over the last 60 minutes. I hope I didn't bore you. I hope I've given you a little bit more insight into what UEM Edgenta is. And I hope you understand our company a little bit better, so that the next time you picked up, research report by M+, you understand a little bit in terms of, what Louis and the firm is talking about. But last key takeaways. I think Edgenta, given, like you mentioned, we've been listed since 1964. This is the business that we know best, and we are probably one of the leading asset managers in the region. This business is not going to go away. It has impacted quite a bit the industry in the short term. We are very positive in terms of the recovery. We are very positive in terms of where it's going to go. We feel that there is a very strong recovery line of sight that we expect to capitalize. And most importantly is this: as the new normal comes in, the big question for a lot of companies is, are we market relevant? And for me, I think Edgenta moving towards EUTF 2025 with technology, integrated sustainable healthcare, and sustainability is going to drive the future of the business going forward. So with that, I thank you very much. Please do continue to engage with us. I've got my team as well. If there are any questions, please feel free to continue to share with us.
Okay, thank you so much, Mr. Rais Imran. So I thank everyone here for watching us, to have you here for the past 1 hour, and hopefully we have some good updates from Mr. Rais in the future. Thank you so much to UEM Edgenta. Thank you, Mr. Rais. Thank you.
Thank
See
you, Louis.
Bye-bye.
Thank
Yeah,
you,
good
M+.
night.